Hey TMFG community, John Yocconetti here with Carlo Cancino. In today's episode of AskTMFG, we're going to be discussing GICs and specifically how they fit with your retirement planning. Remember, if you do enjoy our content, like, comment, and subscribe to the YouTube channel. We love doing these videos for you. In today's episode of AskTMFG, we're going to be discussing GICs. They've been a very prominent investment product in the last couple years now that interest rates have been increasing. A lot of clients have had questions about them. So today we're going to walk through some of the pros and cons of having them in your retirement plan. So Carlo, why don't you get us started?
Thanks, John. GICs, Guaranteed Investment Certificates. It's in the name. There's a guarantee, so why wouldn't it make up a part of your retirement income portfolio? But as good as they sound with that guarantee, there are many cons that are involved with having them there. Number one, you may have a guarantee of an interest rate, but that interest rate may not be enough to outperform inflation, maintain your purchasing power while in retirement. Number two, lack of liquidity. If you need income from your portfolio, tough to break a GIC term. In fact, there are GICs where if you try to break a term, there's a penalty involved, lose interest, and actually lose a bit of your capital. Those are some tough pills to swallow if you're looking to maintain your income stream in retirement. Another con to having GICs in your portfolio, if you have an open account and they're invested there, the interest that the GICs provide is not very tax efficient. You have to claim all of the interest income that's gained in that calendar year on your tax return.
Yeah, excellent points there, Carlo. You know, we know there's going to be the pro that's there that everyone goes to is the fact that it's guaranteed. And you see a certain rate. A lot of investors kind of have that nervousness when it comes to the markets. Nothing is guaranteed when you're investing in a stock portfolio because we have a lot of volatility at that time. Frankly, us at the McClelland Financial Group, we feel that the pros greatly outweigh the cons, but that doesn't necessarily mean that a product like a GIC can't be beneficial for you throughout your retirement. And one of the alternatives that we've had discussions around is something called a high interest savings account. Now, a high interest savings account is very similar to a GIC where it's based on interest rates and it does pay interest to the portfolio. But one of the benefits of a high interest savings account as opposed to a GIC is liquidity. So a high interest savings account, entirely liquid. You can sell the fund within even a couple days after purchasing it if need be. It just provides what a GIC, what's attractive of a GIC in the fact that you can get interest and relatively guaranteed return, but also has the pro of being fully liquid.
So I think it's safe to say that there is a place for GICs or a high interest income component within a retirement income portfolio for people who are risk averse, who can't take the short-term volatility with a stock portfolio. But that doesn't mean you can't own a stock portfolio that has some level of safety. When we create portfolios at the McClelland Financial Group, there is the component that's in the stock market, capturing the stock market returns. But you can manage your risk level or your capture of the volatility by increasing the amount of fixed income in your portfolio. Fixed income in your portfolio would be bonds, bond portfolio, bond funds, where there is liquidity. You are getting a fixed rate of income from these investments, and they make up a part of your overall investment strategy. So those who are risk averse can still have access to the stock market, but you can determine your risk exposure by increasing or decreasing your fixed income exposure in the portfolio.
Absolutely. At the end of the day, a GIC is a good short-term product, but when you're working with a financial planner, we're thinking more long-term. When we're thinking about your retirement, that's more of a long-term goal, and GICs are kind of a square fitting into a round peg. It doesn't quite work just as well. So not to discredit anything from GICs in general, just when it comes to retirement, there are better alternatives out there like Carlo had just mentioned. Well, that's our episode of AskTMFG for today. Let us know down in the comment section below if you are currently investing in GICs or any of the alternatives that we had discussed today. Remember to like, comment, and subscribe to the YouTube channel. But until next time, I'm John Yocconetti.
I'm Carlo Cancino.
And this has been
AskTMFG.